Hey, I'm Walt, and I'm here with another Dividend Talk video. All right. In this video, I want to talk about adding a monthly dividend income. Right. So, currently, one of the things that with my portfolio is all of my holdings for dividends, they're all of them are literally pay me out quarterly. All right. So that basically means that quarterly being that they pay me out 4 times a year. Right. And there's nothing wrong with that. But I came across this particular stock, right? It's a dividend aristocrat stock. It is a monthly paying stock, and that is O Realty Inc. Now, for me, I like to look at my dividend stocks. For every $10 I pay for it, I want to get at least 10 cents in dividends back. All right. So what I decided to do, what I had to do, was look at it from not a monthly perspective because O, let me see, uh, O Realty Inc. Monthly dividend amount. All right. So we can go to AI mode and take a look at this. So there is rently as monthly amount is currently 27 cents, right? So when I look at that, I can't just look at it from the perspective, okay, well, it's currently trading at 60 something dollars a share. I can't look at it and say, okay, well, I'm buying it for $60. It's a monthly dividend paying stock. So I'm expecting to get at least 60 cents. No, I got to look at it from the same framework as how my other quarterly paying dividend stocks are, right? So if I ask Google AI, how much per share do O pay in dividends quarterly? All right. And that'll probably be like 80 something cent. All right. So realty income does not pay a quarterly dividend, yeah. But if you are looking for it from a 3 month quarterly window, the current cumulative payout is 81 cent. All right. Because that's what we're looking for. So then let me see what did the stock price close today at? All right. It closed at $61.91. All right. So in a quarterly perspective, it's paying me 80 cent per share, which is more than enough for what I look for, right? So that passes the first check mark for me, right? So the next thing I want to do, I know what the company is. It's a REIT, a real estate investments trust, but we're going to look at what is O Realty Inc. All right. So Realty Inc. Corporation, O, is a massively publicly traded real estate investment trust, a REIT, that manages over 15,500 commercial properties globally. It is a widely famous among income investors, ding ding, because I'm buying it for the income, and it's officially traded, nicknamed the monthly dividend company. All right. So then it goes and break down the core business model. All right. The properties, they buy freestanding, single tenant commercial buildings like grocery stores, convenience stores, dollar stores, and pharmacies. All right, the leases, they lease these structures out to major corporate clients under long term triple net lease agreements. Under a triple net lease, the tenant is responsible for nearly all operational costs, including property taxes, insurance, and ongoing maintenance. All right, which means when I read that the money that the trust, the REIT is getting, does not have to go out for additional expenses, right? So that is more money that is allowed to go into income, and the more that portfolio grows, guess what? The more income me as a investor can get. All right. And it goes into just talk about some of the high profile tenants, Dollar General, 7-Eleven, FedEx, Walgreens. All right. So that right there passes my test as far as what kind of properties that portfolio holds. They're actually worldwide as well, so I'm not so concerned or worried about that wreath just bellying up. All right, so the next thing I want to know is the dividend, how sustainable it is, and should I be worried about any potential cuts. All right, so what I like to say is, how safe is the dividend between a scale of 1 to 10? All right. On a dividend scale of 1 to 10, Realty Income's dividend rate is a 8.5, right? Which is very, very, very solid. It goes into key metrics supporting the safety, the strong AFFO, dividend coverage, the elite 31-year increase history. Basically, this is a Dividend Aristocrat stock. It has been not only paying its dividend every year, but it's also increased it. All right. And then it even goes into talking about during 2008 in the great financial crisis, and in 2020 during the pandemic, not only did it keep paying the dividend, but it also grew it. And that is something that I also like so much about these Dividend Aristocrat stocks and King stocks, because when you look at some of the recent, or, when I say recent, within the last 20 years, financial crises or global crises, for them to still be able to have that a level of sustainability when it comes to paying out dividend income, that is the type of company that I look for when I'm talking about investing in and making sure that I can continue to generate that income. All right, so the next thing I'm gonna look at is, because I like to make sure that the price that I'm paying for it is under the average. So I'm gonna ask, what is the price forecast? All right, so, or the stock price forecast. Average target, $67.46. All right, and if I remember correctly, when we looked at it earlier and asked what was the current stock price, it was at like 60 or 61. So right now, based on today's closing price of $61.91, this average consensus target implies a potential stock price upside of approximately 8.9%. All right, so to me, it's great to get that dividend and continue to have it to grow. But I also want to make sure that my money, my capital, my seed money, my initial investment can also make some money. So this is something that I will be more than likely adding to my portfolio, as long as it stay within under the average price forecast, and allow me to get at least 10 cents per share to every $10 that I got to pay for that stock. It'll probably be added to my portfolio probably later at the end of the year, because I want to also get Prudential, which I discussed in an earlier video, and JM Smuckers. All right, so I'll probably do some form of a rotation for all three of them within this course of the year, while still making sure I get to 50 shares of Enbridge and Eversource Energy. All right, once again, this is not financial advice. This is just my portfolio transparency. If I'm going to discuss these things and what I'm going to do, I'm going to show you that it's possible and that it actually works for me. All right, so do your own due diligence. Do some deeper dives. These are just the general dives that I like to do. A lot of times, in my opinion, we dig a little too deep and start getting into the weeds about financials and this, that, and the other. Some things are just common sense. This right here is enough information for me for what I need to do as far as generating my income. And this is a solid company, all right, or a REIT. And I'm going to make sure that I include that as part of my portfolio and have my first monthly paying Dividend stock. All right. If you have any questions, as always, leave them in the comments, and I will always make sure that I get back to you and answer those questions.